Rotimi, thank you so much for your time. Would you agree with this analysis of the market in February? It's really a case of investors just waiting to see how the central bank's monetary policy plays out. At some point, there was an expectation that interest rates are going to be lower for longer, and then they began to creep up. And as you know, many of the local institutional investors, really, especially the pension fund managers, like to invest in fixed income instruments. And so perhaps those who are looking attractive again, and so some investors started to pause. Overall, how do you assess the market's performance in the month of February?
Well, I think ordinarily the results begin to come out in the month of February, and that definitely should have been a period whereby we have an upward trend in the prices of securities, especially those ones that are declaring good results. And we saw all that in expectation. Just as mentioned earlier on, until the Central Bank of Nigeria actually changed the game plan, whereby we saw a situation whereby rates started going up, and because of inconsistency in CBN policies, we are seeing a reprisal effect on the equity market. And I believe strongly that non-investors may still be willing to opt out of the market because there's that likelihood, there's that trend that is most likely that in such a situation whereby we're going to see the rates continue to go up, and investors definitely want to opt out for what is more secured and less risk assets, which is government securities and fixed income assets. So,
right, Rotimi, but what about? Sorry to butt in, but I quickly have to ask you this: what about all that was said about the expectations for corporate Nigeria in terms of corporate actions, dividend payments, that would be an incentive for a lot of investors to stay in the market and buy equities? We saw Zenith Bank, for example, report its full year numbers, reported a dividend, and we did see a reaction over the first 2 days. Do you get the sense that that conversation around the market being a play for dividend is now in the back burner?
Well, I think we need to look at it from this perspective. We're fully aware that the previous year we saw the COVID-19 effect on pricing of securities, but thereafter the market came out of it. So those who have been holding on to their securities, having bought when the prices were low, are definitely most of the ones opting out of the market now. We also have a set of investors that will not buy until they begin to see what the companies are likely to do. We are still having such in the market. But the top of it all is the effect of the change in the rate that CBN introduced in the month of February. And I think that also is weighing so much on the market. So those who have actualized some gain appreciation in the securities that they bought prior COVID-19 or during COVID-19, they've already made substantial income and they are not even ready to wait for dividends. So that is the effect we are seeing now. And I believe that strongly that with the way it is going, it's going to be a very tough one for the market if after the earnings season, if the first quarter result is not so much better than the obituary report. So we are going to have that at the back of our mind that it may definitely turn out worse than what we are seeing. But all in all, I believe that the good result is should investors should be able to see that they are going to hold on to what they have and not allow anything to dictate their mind.
Rotimi, what can you say about some of the trends that we anticipate would begin to be a conversation moving forward? As we see more volatility in the market, there would be some who would like to take short and long positions. And now that the securities lending program is taking off in the market, we should see some short selling in the market. Or am I reading that wrongly? Because it does appear that in terms of the infrastructure and the framework for that to happen, all that is set now, and given the uncertainty about the market moving forward, then one should expect some investors to begin to take either more short positions because of their concerns about the market trends.
Well, I think the volatility that we are seeing right now is brought about by the inconsistency of the policies of the Central Bank of Nigeria. And if we see an upward trend in rates after the one they have already done, with the ones coming out in for April, is not the same thing. I mean, for the second tranche of TBs and those ones that are maturing, what that will imply also will be more volatility for the market. But I believe that if the PSCs are not actually selling off, as some of them are doing right now, then definitely we have a more stable market since the foreign portfolio investors are not here to bring about more instability. So we are going to watch the trend, and we hope that we'll get the best out of it. Since the fundamentals that actually govern investment in securities are still very strong for a lot of those securities listed index.